If you're watching this video, then you're likely interested in co-signing for a loan and or trying to figure out what exactly does that mean. And for that, my answer is don't do it. Don't do it. Please don't do it. I'm just kidding. I mean, that's ultimately up to you. But in this video, I want to discuss exactly what it means to co-sign for another person, because I wish someone would have told me this earlier in life and saved me the headache it turned out to be. Alright guys, so when you co-sign for a loan, you promise to pay off somebody else's debt if the borrower stops making payments for any reason. Stop and think about that for a minute. This is a very generous act, as it can help a friend or family member get approved for a loan that they otherwise wouldn't qualify for. However, it's also risky to guarantee a loan for somebody else. So before signing any paperwork, I think it's very important to learn what happens when you co-sign and the risk it can create for your own financial stability. By the way, if you're new to the channel, welcome. We cover all things finance and real estate related. And if you're enjoying this video so far, please do me a favor and tap that like button. It really helps me out with the YouTube algorithm. Alright, so if you become a co-signer for somebody, you are essentially helping that person get approved by adding your name to the application. Now, while that may sound great at first, it also means that you are legally responsible if that person were to default on the debt. A co-signer is not applying to use any of the money in the loan. Instead, you as a co-signer guarantee that the loan will be repaid if the borrower stops making payments or defaults on it entirely. Oh, and let me tell you, Joe dolls, it gets even better. In addition to being responsible for repaying the loan if the borrower cannot or does not, you're also responsible for the interest, late fees, and collection fees. A lender may require a co-signer when the borrower is unable to qualify on their own due to not enough income to cover the payments, poor credit or no credit, and maybe recent bankruptcies. These are all typically the most common reasons someone would need a co-signer. So you as a co-signer may have enough income, you may have better credit, which will help strengthen their loan application. But now that we've discussed what co-signing entails, let's discuss some of the risks associated in becoming a co-signer. The most important risk is damage to your own credit. If the borrower does not repay the loan as agreed, your credit suffers along with the primary borrower's credit. Any late and missed payments will appear on your credit report, which will cause your credit scores to fall. And if you think about it, that could become a domino effect, meaning it will get harder for you to get the financial products that you may need in the future and at the best possible rates. I mean, you could end up paying higher insurance premiums and other fees because of the actions of someone else. Again, when you co-sign, you accept full responsibility of what happens with that account, meaning lenders will expect you to come up with the required payments plus any additional interest and fees. And let me tell you, it doesn't matter if the borrower has more money than you or is able to pay. If it doesn't, they don't care. The lender collects wherever possible and they take the path of least resistance. So when you co-sign, you agree to put yourself in the mix, and the lender may think it might be easier to get the funds from you. That being said, let me tell you a personal story and why I personally think unless you're married to someone and maybe in some very limited circumstances, you should not co-sign. I actually have two stories, although the second situation isn't nearly as bad, but I still paid the price for co-signing. So back in college, I co-signed with a friend on a Best Buy credit card. I thought I was just being a good friend and helping out my friend who I thought was responsible. So they ended up getting an Xbox, a PlayStation, multiple TVs, video games, accessories, I mean all types of stuff. And before I know it, they were thousands of dollars in credit card debt at 30% plus interest. At first, things were all right. They were making the minimum payment, but after about 6 months, my friend lost their job and the entire situation became a big mess. They just said, screw it, and stopped paying. Before you know it, all types of late charges, interest fees, all types of fees started piling up, and I was getting harassed on a daily with phone calls to collect payments. The situation ended up destroying our friendship, completely ruined. The account ended up in collections after a while, and I ended up negotiating a settlement amount and paying back all this debt that was not even mine. Talk about opportunity cost, the time and energy wasted, the harassing phone calls, thousands of dollars I ended up spending, which could have been invested, and who knows what that money would be worth today. On top of losing a friend, it hurt my credit badly and stayed on my account for years. It frequently came up anytime a lender has a question about my credit report. Now, the second time I called myself being in love, I was young, dumb, and full of I was full of desire to make someone happy, and so I co-signed on a 2005 Infiniti truck. Now this situation doesn't quite have all the dramas I experienced with my friend, but let's just say this relationship did not work out and we went our separate ways. Thankfully I wasn't screwed over and left to pay for a car I wasn't driving. They did make the payments, and they did make them on time, I might add. But what ended up happening is that when I went to later get a car for myself, it made the process way more complicated with the debt-to-income qualifications. So here's the deal. The car payment for my ex shows up on my credit report as a liability. In essence, it looked as if I was taking on 2 car payments. It took years until that car was paid off in full, and as a result, I suffered some financial setbacks. So with that being said, Joe, before you sign on that dotted line to take on someone else's debt, which can become your problem, make sure it's absolutely necessary and that you're prepared for the worst if the worst were to happen. Hope for the best and plan for the worst. If you found value in this video, do me a favor and tap that like button and share with others on social media. It really helps to support and grow the channel. Don't forget to subscribe and turn on the notification bell as I'm posting valuable new content multiple times a week. Thanks again for watching, and until next time.